welcome everybody. And yeah, this is going to be fun. And I'm going to just kind of spend a few minutes here just talking a little bit about, hey, why are we here, and who's TG anyway? So I was actually doing a talk in November at the Vegas Expo, the Traders Expo. And of course, November, it doesn't seem like that long ago, but that was about 8 months ago now. And after the talk, TG came up and usually I'll get questions, people afterwards are like, hey, yada, yada, yada. And what was interesting is right away, I was like, oh, this guy has got he's got some really interesting stuff that he's put together. Tell me more. And so he went through, and so he started talking about his background. He's like, well, I'm an engineer, I've got a pilot's license, and if I'm going to be doing something, it has got to be with precision, and the only way I can trade is with precision. And so have focused all my energy on back testing stuff and creating a mechanical set of signals that worked for me. And I was like, well, that's great, tell me a little bit about it. As he went through and talked about it, I became very intrigued, because it's an area that I just don't do. Like, I don't have pure mechanical systems like that, or purely mechanical, there's no opinion needed, kind of trading signals, um, with that precision. Okay, and so that was kind of the first thing that really intrigued me. And then the next thing that intrigued me, when he was talking about his returns, he was getting fairly impressive returns just trading stocks. And I was like, what, you're not trading options? He's like, oh no, I don't trade options, I just trade the stocks. And so if you look here, he's talking from a period of from April, so over a 1-year period from April to May, from 2018 to 2019, trading stocks, he made an 86% return. Now, most people, if you're trading options, okay, just options, it's like, oh yeah, 86% over the course of a year would be great. This was trading non-leveraged instruments, okay? So, and then you can see here from the IRA, 103% in an IRA. So from there, the question is, here's where I became intrigued. I'm like, okay, well, that's, first of all, it's super impressive with stocks, with a non-leveraged instrument. Where I became intrigued is, what would happen if I were to apply leverage to TG's stock setups? So that's where I thought this would be kind of fun. So what we'd like to do is, he's put together a great presentation, kind of talks about his strategy and talks about his system. And again, while he's focused on stocks, and for those of you that are interested in trading stocks, this is a great system for stocks. But if you know options, you can trade options on this stuff. And think about it. If you get 86% trading stocks, if you're trading directional options on that, you multiply that by a factor of 2, 3, 4, 5. All right. So anyway, I thought it'd be pretty great. So with that, TG, welcome to your first webinar with Simpler.
Well, thank
and
you.
I'm going to turn this over to
you. Thank you, John. Appreciate it. Hey, everybody. How's it going? I am TG Watkins, and this is the Moxie method. Thank you very much. This is how to generate 10 to 200% returns, even if you're new to trading stocks. So this presentation is going to be for you if you want consistent profits from stocks. As John mentioned earlier, I'm really not much of an options trader, so that's what I'm going to be up to. And I really like to just trade the stock. As you saw, I have a Roth IRA account, and they have some restrictions. It's a little bit slower, so that's why I like to stick to stock and just kind of keep things nice and simple for all that. And then, of course, again, this is going to be for you if you don't want to be watching the market all day. Now, I am primarily an end-of-day trader, and so that's what I like to do. And really, it takes me just a few minutes each day to kind of go through my watch list and figure out what works for me. And then also, if you've never been profitable before, this will be a great presentation for you, because we're going to be going into some things that will be good for beginners and also advanced, because that is what I do. Now, what you'll discover tonight is how I reliably generate 10 to 200% gains in just minutes a day on what I call Moxie stocks and Moxie trades. Now, yeah, we'll get into the 200% gains and a trade on that one a little bit later. And I call these Moxie stocks because we want something that has a lot of pep and a lot of aggressiveness and a lot of oomph, and really come out of the gates and give us a lot of pressure, and go straight up when we can find those kind of stocks. That's really what I'm looking for. And then also tonight, you're going to be seeing how I target these powerful short-term pops and drops for these extraordinary results. And of course, we all want to be catching those pops. I mean, we typically go long, especially in an IRA. We can't go short. We all want to go with the market, and the market usually is going up. But it's just as important to know when the market's going to drop too, and just as important to know when a particular stock that we're in is going to have the bottom just fall out beneath us. And we want to make sure we know when that's going to happen, so we can capture that money and put it away and preserve it. And then we can live another day and start trading more and more with those results that we have. Now, the other thing is how I get into the right stocks at the right time. I mean, everything's about timing, right? That's really what's important. We don't want to be wasting our time value of money on things that are just not going to be working out or just go sideways for a long time. And of course, we always want to make sure that we're avoiding bad trades. So here's an actual chart of the trades that I take. This is Beyond Meat. I'm sure a lot of you are familiar with it. It's a recent IPO. And this is how I actually annotate my stocks. So this is the charts that I have. You can see here that this is the hourly chart. I got in here just as price was starting to move up. The purple line is the 50 SMA. And then you can see here, I was able to capture a quick 10% move on that one. And then notice just as it dropped, I got out just before it dropped, took a little off, and then came back in here, found a little support, and then it moved right back up. And I then cashed it all out for almost 30% right in through there. Everything was looking pretty good. Now, earnings came after that. I like to avoid them. And so after earnings, I let all the chaos go by. And you can see I got backed in when it found its turnaround and started to come back in. Look at this. Quick move, 34%, nabbed that one. I left a little bit on the table because I wanted to see what this thing did. And it kind of fizzled a little bit. But I captured remaining 10%. And look at this. I got out just before it dropped. So this is what I'm talking about when these pops and drops are very important. And that's how I target them with the checklist that I've created. And it's very important to have this kind of process that we go through. And of course, the key is to look beyond price. But it's a little joke of the day for that one. So looking beyond price, I'm able to look beyond and past price to really see what's going on inside, trying to see what's underneath the surface. What about that momentum? Is that momentum building or is it eroding inside there? And we need to know when to get out. And through my analysis of the data, I'm able to consistently see when a stock is likely to pop or even drop. And as I said, very, very important to know when those things are going to happen so that we can start putting some money on this and start building that wealth that we really want in this industry. So the method that I developed routinely finds stocks that can move 10, 20, or even 200%. And I'm serious about that. We'll get that a little bit later. My method has allowed me to grow my account over 103% in a little over a year, as John kind of talked about earlier. So thank you, John. And this is how I catch moves like this. So here's another example. This is QTT. And you can see right here, as price was kind of flattening, I got in right there at the white line. And look what happened right after I got in. That thing just started to take off. So this is the kind of stuff that I'm talking about. These are the Moxie stocks that I'm looking at. It went up, pulled back a little bit. Now, this is what I call a trampoline move. This is when price goes below the hourly 50 and the Moxie indicator is still above 0. And this is the reason I call it a trampoline move is because look what happened after that. It just went straight up right after that. So I decided to cash in because my checklist told me that this one was good enough. 57% gain. I put that in my account, into my pocket. And you know what happened after that? Basically fizzled. So I was very happy with that one. And you know what? I do this without sitting at my computer all day long. As I said, I'm primarily an end-of-day trader. And so really this kind of stuff just takes minutes a day for me. 57% gain, not too much to be upset about. So you'll be able to see how it's possible to get in the right stocks at the right time. Here's another example. We got BE, Bloom Energy, right here as price was flagging into the hourly 50. And look what happened right after I got in, straight up. That's the kind of stuff I'm talking about. Those are the Moxie stocks that I love. And that's what I look for all the time to try and build this stuff since I'm really just a stock trader. We need to get these kind of percentages if we're going to be making some money with stocks. And as John said, if you decide to do some options with this, great. There's something strong behind this. Now you can see that there was a little bit move after this, but that's okay because you know what? My checklist that I followed said get in here and take the money and run here. And this little bit, I wasn't worried about it because look what happened after that. If I wasn't quick enough, I would have given it all back and I would have been very, very unhappy about that. So this is how I get into the right stocks at the right time. And of course, trying to avoid those bad trades. 26% gain on Bloom Energy. Very, very happy about that one. So here is a screenshot of my account summary of all the accounts that I manage. And this is what we want to see. This is how we make our money work for ourselves. And we kind of build that account from the lower left to the upper right. We want to be seeing stocks like this. We want to see our account like this. This is all the way back to July 2017, $120,000 in there. And then we go year forward, July 2018, 203,000. And then we start getting some fun stuff in here, right? Now we're talking July 2019, up to $517,000 for the summary of my accounts. And this is what we're looking for, those strong returns year after year without being that stock market pro. And that's what I'm going to be helping out with. And the objective with any trader, as John has told us many, many times, is to get the net liquidity of our accounts to go from the bottom left to the upper right, just like those stocks that we want to find. Any downtick should be small. And really, at the end of the day, not much else matters except for getting the lower left and the upper right. So a little bit about me. John did a great introduction. I appreciate that. So my dad introduced me to the stock market when I was a little kid. He'd come home from work. He would be on his computer. We'd be looking at stocks. Do you guys remember daily graphs back in the day? That was kind of the thing that we looked at. Once a day, once a week, we'd look at stuff. My dad wasn't much of a trader. He was more of an investor. And really, I didn't know much about the stock market. Really didn't know anything about it. I was a little kid, but I was exposed to it. I knew it was important. And this is something that kind of stuck around. And so I kept kind of thinking, okay, well, my dad's showing me this. I should probably pay attention. And you know what? I think sometimes he asked me questions like, hey, does this look like it's an uptrend, or how does it look as a sideways trend or whatever? And he told me later in life, he said, actually, you helped me make some good decisions on that. So I think there's an IOU somewhere in there. So we're gonna say that maybe there's an IOU that he still owes me some money for those good trades that I helped him make as a kid. Well, this might be a familiar sight for some of you. Oops, sorry, I don't know how to get rid of that. But so we have probably all been to these trading seminars, mostly with our peers, and seeing older people around here. And we haven't really seen kids, is my point. And really, when I was 12, my dad actually brought me from Phoenix to Texas for a two-day stock trading seminar just like this. And I was 12. Now, as I said, I didn't really know what I was doing. I was trying to pay attention to it. I was, big words were getting thrown around like Fibonacci and regression and retracement and all this kind of stuff. But I remember that when I asked one of the presenters, when we were off kind of on our own after one of the presentations, I said, is this really possible? I mean, do people really make money from this? Is this really something that we can do to make money and make a living? And he said, of course. No one was born knowing how to trade. And that was really something that stuck with me, especially later on when I was really trying to actually do this full time and as a career and for money. That really inspired me because I was like, oh, you're right. We weren't born knowing how to do this. And so that was something that I said, if it's learnable, it's teachable, and therefore it's learnable. And so a little bit about my background, because my background helped shape my future as far as what I do for my how I trade. And so I went to ASU University with Polytechnic campus, and I graduated in 2010 with manufacturing engineering. And so I have a engineering mindset. That's really what I come back from, and that's how I think about things. And so then I also sidestepped from there, and I went to join New York Life, and I got my Series 6 and 63 as a financial advisor from 2010 to 2014. And I enjoyed it. I wanted to learn more about money and learn about how to actually grow things and make sure that we help people and what to do with our financial future. But then another thing is I have a 1977 Camaro. I've owned this since high school. It took me 2 years to restore it, and I really enjoy it. But I realized that at a young age, I had kind of expensive hobbies that I needed to pay for. And I was like, you know what? I should probably go into a field that I need to figure out how to make this kind of money and actually do this, because this is the kind of life that I want to be able to sustain and carry forward and provide something for my kids as well. So trading, like horsepower, is exciting, but if you don't know how to handle them, you and your account will end up in a ditch. Now, fortunately, my car and myself have never ended up in a ditch. I've been responsible about that, but I can't really quite say the same about my account. How about you guys? Anybody else kind of run their account into the ground? I mean, yeah, that's what I thought. I'm starting to, yep. A lot of people are saying, yeah, we've had some troubles. I get that. Trading's hard. We kind of make some swings. We go up, we go down. And, John, any other trader out there, you haven't really kind of earned your salt until you've actually run an account into the ground. So this is nothing new to a lot of us.
I mean, you got to get it over with, right?
Yeah, just pull that Band-Aid off, blow up an account, and then we can actually get on with this, right? So another thing that kind of shaped my trading style is that my dad and I are both pilots, which instilled a lot of discipline in me, because if you aren't disciplined, you're going to be reckless with your account. You're going to violate your checklist, and you're going to run your account into the ground. You're going to kill it. You're going to have some troubles. And the same thing goes for being a pilot. If we just go up there and we decide to just take off and we don't check certain things, we're going to forget something. We're not going to know what the weather is, and we're going to have some troubles, and we need to make sure that we have a safe flight going forward. So discipline was a really big factor when it came to being a pilot, and also something I brought to my trading and my trading experiences. So as I said, there are a lot of similarities with trading. We have a checklist and with checklist, and then a process. And this is stuff that I brought over from the aviation world. So with aviation, as I said, we had that checklist before any kind of flight, takeoff, landing, taxiing, parking, any of that. And we had the same thing that I brought in with trading because I thought, you know, there's a process to this. We need to make sure that something starts to shape up. Like, what do you do when the stock does this or does this? We need to make sure that we check off A, B, and C before we actually go into a trade. We can't just be willy-nilly about this and then throw money around. The other thing is we need to have rules. We need to make sure that we have a set of rules so that we know what gives us the best opportunity when we go into a trade to minimize the risk of what we're doing, because it is a risky field that we're in. And so the rules help us figure out what is shaping up and how to actually make sure we get into good trades and follow the same process over and over and over. Then the other thing is discipline. And without discipline, the first two things really don't matter, because if we don't have the discipline to follow our checklist or to follow our rules, then what good are they? And we're just going to be emotionally trading, and we're going to just start throwing money around. And really, at that point, it is gambling, and we don't have an edge, and we don't know what we're going to be doing. So all of these are very vital to keeping the plane and your account from crashing and burning. Now, the thing I love about trading and the trading lifestyle is because actually 5 days after my 33rd birthday, I moved to Denver, Colorado. I'm from Phoenix, Arizona. I moved to Denver. I'm now in Austin. So you can see I move around. I enjoy it. And I wanted to see what it was like. I was born and raised in Arizona. So I said, hey, things are going well, having a good time. And let's use this advantage that we have about trading to where we don't have to be anywhere. We don't have to be in an office specifically. We can do it on our computer or our laptop. And so that's where I decided to move to Denver. There's a picture of me on the left, up on our sun deck, looking over the downtown city, over a nice park, and of course, reading a trading book. This is Trading in the Zone by Mark Douglas, another one that I highly recommend. And of course, we do always need to be continuing our education and always learning. We can't stop. Another thing I did while I was up there was whitewater rafting on the third one on the back, kind of in the middle. And it was great. I met a lot of friends. I had a couple relatives up there. And so I got to go out and do these great adventures that I wouldn't have been able to do in Arizona just living there. And then, of course, it's Denver, Colorado. They got mountains, and those mountains have a lot of snow. And I was there during the winter as well. And so I kind of felt obligated to learn how to ski. I'd never learned how to ski before. I've done it a couple of times, but didn't know what I was doing. And so I bought some equipment and I went up there and I started to learn. I actually had a good time. I didn't break anything, so that's all right. And the thing about this with trading is that, you know what, on a Tuesday, maybe when everybody's holding their breath with the FOMC on Wednesday, what do I get to do? I set my stops and make sure everything's okay. And I get to drive up to the mountains on a Tuesday morning, and I have everything to myself, and I got all the slopes to myself, and I get those gondola rides over and over and over, and it's great. So this really is some of the stuff that I like about the trading lifestyle. Another thing, so my dad and I are both pilots, so that means we have some pilot friends. And so this is my buddy on the right, and he had a gig up in Juneau, Alaska for a few months. And he called me, he said, hey man, this thing is great. Like, it's beautiful up here. The sights are incredible. And I always got a jump seat ready if you want to come up here. So I called my dad because he's up in Seattle. And I said, Dad, you want to go visit our buddy up there and fly around Juneau, Alaska? And he's like, yeah, sure, let's do this. So again, we were able to kind of take our laptop and we can go someplace. We can still check the market. But in the meantime, we're up there in Juneau, Alaska, and we get to go see all the sights. And so we're in front of the icebergs and glaciers. And then on the right, it's basically my buddy's office, and a view from his office, right? So I'm on the right seat, co-pilot. We're coming into one of these backwood landing strips, and it was just beautiful, and it's great. And this is the kind of freedom as a trader that I'm able to do. Another thing that we get to do is get to spend our time our way. And so I'm sure a lot of us have, well, we all have family, but I'm sure a lot of us have kids, grandkids. Anybody here have some grandkids that are in another state that they want to go see and could actually wish they could spend some more time with? Yeah, of course. Everybody's having that. So I have a new niece. She just turned 1 a few weeks ago, and I decided to go up there and celebrate her birthday with my family. And so I actually did just come back from Seattle. I spent 3 weeks up there, and it was also my brother-in-law's birthday. That's him on the left. When we decided to go out and actually get some sunshine. It's Seattle, right? So summertime, we actually get some sun. So everybody's enjoying it. Everybody's out at the parks and having a good time. And then that's my dad and my sister and the niece. And then of course on the right, she's over there just looking super cute. So yeah, we had a good time with that. And that's really part of why I like trading, because I can go up here and I don't have to worry about the 9 to 5 grind. But what if we don't have an edge? And I didn't have an edge to begin with either. It's hard to grow your account. We can't find the right trades, and we're missing out or getting in too late. I mean, I get this all the time. Things are moving, the stocks are moving. We see this, we see these opportunities, but we keep missing out. We don't know how to get into them. Or we see these things and you know what? By the time they actually start moving, we think, okay, this one's going to be good. And we get in, it's too late. And as soon as we get in, it turns around and reverses, and then we have some troubles. So then the struggle, and I get it, the struggle is real. Stocks move up and down for all sorts of reasons that just can't be seen through price. We have Fed meetings, we have news, tweets, politics, earnings, and now we even have computers with algos and black boxes. I mean, this stuff is crazy and it kind of makes things challenging. And this is the market. This is what we're trying to figure out. And I get it. We all kind of struggle with this. I mean, every trader has a hard time, but some of us have been able to figure out really what makes the markets move. And this is what we're trying to do, is turn around and give it back. So the key takeaway is the market is always right. And what we're trying to do is kind of just dip our toes in and take out a little bit of money for ourselves in this ever flowing stream of money that is called the stock market. And so that's the struggle I faced when I made the big leap. And that big leap was finally deciding to leave corporate finance, to leave New York life and go off on my own and go do this. I could have gone into aviation or engineering, but I chose trading because of the freedom and the ability to leverage my time, as I talked about earlier. And I spent years studying these squiggly lines that made no sense to my brain and to my eyes. I mean, we look at these charts and we got lines and we got bars and we got indicators and stuff, and just it wasn't making any sense to me. And I just couldn't consistently find why price was moving and when it was going to move. And so before I joined Simpler, I studied from mentors who had charts like this. Trust me, I did. They were just like this. And I don't get it. It doesn't work for me. It's crazy. But I got to say, a few of them who had charts like this, I mean, they made some really good money. They were very, very wealthy people. They had a good following and they made good money. And I was like, well, hey, if it works for them, maybe it can work for me. And it just didn't, because I took time trying to do all this. And I said, fine, I'm going to have to break off and kind of figure out my own path and something else to do, because this doesn't work for me. And when you know what doesn't work with you, then that's when you kind of move on. So I was thinking, okay, well, if one indicator is good, then more must be better. And so I started adding more indicators. But the problem was, well, how do we know about these indicators? What do they do? How do we make sure that they don't conflict? I mean, has anybody here ever had multiple indicators and you think, okay, well, these two are saying yes, but these two are saying no. And what do you do about that? Like, do you go or do you not? How do you trust which indicators more than the other ones? And that was the kind of thing that was really throwing me off. And I started to get into this analysis paralysis. And then I started adding indicators to price. And then I started burying price, and I was back to that screen I said where I couldn't see anything. I mean, look at all this stuff. I can't see what price is doing. Therefore, I couldn't figure out when it was going to go and what kind of trade to make and when the trend was going someplace. And so what I was trying to do was figure out these reliable signals. And going back to what I talked about earlier with the purple line, and I was figuring out, okay, we have two different trades here. One of them went down through the purple line. The other one bounced off of it. And so I was thinking, well, these aren't necessarily good or bad trades. They're both trades. The one that went down also was profitable if I knew that it was going to go down. And the one that went up was also profitable if I knew it was going to go up. And so that's what I was trying to figure out. But the problem was I was having a really, really long learning curve with this, and I was losing money, and I was stressing over all these missed opportunities. It was just driving me crazy. And so I look at something like this and I thought, okay, I've had this experience too. I think many of you had this experience too, where you get in, you have a good trade, and then the thing takes off, right? Like it's doing well. It actually goes up. But then what happens? In one fell swoop, it reverses on us, and we're back at zero. I mean, yeah, I'm seeing a bunch of people saying, yeah, we've all run into this, and that was the thing. It was just, just pulling out my hair. I'm like, what's going on here? And so these were the things that I really sought out to learn and trying to figure out what's happening and why does this do this, and is there any rhyme or reason? Remember, the people back at the stock trading seminars that I went to, he said, we're not born knowing how to do this. And he said, yes, this is learnable and this is teachable, and that's what I was trying to figure out. And so there's another problem that we run into when we're trying to trade and look at these stock patterns is we get into one that it's just treading water. How do we make sure that we don't pick stocks that just go sideways? Because we do have to think about the time value of money. We have to think, okay, if we get into this, sure, maybe we're not losing anything, but it's also going nowhere and we could be using that money better someplace else. And that's what we need to think about. The other thing is this could chop us to pieces. This could chop up our account. We could get in and then it moves against us, so we get out. And then we get in again, it moves against us, and we get out. And it just over and over and over. And so these are some of the things that we need to make sure that we avoid. And how about this? I mean, we got the potential for wipeout when it comes to stocks and the stock market. How many of us have done with this? Like we're in a good stock and it's doing well and it's starting to come into a moving average and kind of lift and move up. And then suddenly the bottom falls out. And this is what I'm talking about. Yeah, I'm seeing a bunch of, yep. Yeah. So this is what I'm talking about those pops and drops. We got to know when these drops are going to happen. We got to make sure that we can prevent this or at least mitigate it as best we can. And those are the things that I was trying to learn from the stock market is, are there any clues to this? Is there any way to kind of figure this out? And so I spent a lot of time with a lot of trial and error trying to figure this out. And it was basically a slow death by 1,000 small losses. And I got to be honest, there were some large losses in there too. I mean, come on, we all know that. And I tried just about everything. You saw that I added multiple indicators and I was trying to follow multiple people and I was trying to figure out what worked for me, and just the stuff wasn't working for me. And that was the thing that I realized, and I had to kind of figure out my own thing. And I just couldn't find a simple, objective way to make profitable trades. And so the engineer in me started saying, okay, I know there's an answer in here and I know there's a way. And so I went back and I reverse engineered all of the big mover stocks to figure out exactly why they moved, how they moved, and if there's a way for me to figure out that they were going to move before they moved. And this is really where I started digging in. So if we go back to the stock charts that I had shown earlier, we see the one here that when it comes into the 50, it bounces. Well, the biggest thing that I actually learned was starting to use multiple timeframes. And so I started incorporating multiple timeframes and trying to see if there were different layers or different nuances or different things that I could see that gave me a little bit better of an eye. And one of the primary things that I did was that I started looking at the hourly chart. And so here it's the same chart, just on the hourly scale. And what I noticed was here, you could see that by the time price was starting to come into the daily 50, it was already being scooped up by the hourly 50. And this was a clue. This was something I was like, oh, I can actually see this. There's actually something here. And then I also had the indicator that I was working on, and it was looking good. And you could see that things were starting to work, and okay, that one took off, and that was a really, really great move. How about the other one? This one's coming into the daily 50, just like the other one, but it didn't work. It didn't bounce off the daily 50. And so I went to the hourly chart, started looking around at different timeframes, and look at this. At the time that it was coming into the daily 50, that one was already getting rejected and trapped by the hourly 200. I was like, oh, I see that. Now the hourly 200, it was this kind of orangey color line. I was like, oh, this is really quite clear. Then you could see the indicator down here was just really kind of trash. It wasn't doing much and didn't look like anything. And it's like, all right, there's a short trade. Okay. Or I just won't get into this trade because it's not going to work out to the long side. So this was really what was getting me going. I was trying to answer the why. Like, why do stocks move like this? Why did it do this? And so I'm looking at these other things and these other patterns. I'm trying to think, okay, so this thing went up, it popped, but I have a good chance knowing myself, and maybe if I'm not quick enough, this thing is going to reverse on me, and now I'm going to get a loss. This winner is going to turn into a loser, and then that's just going to make me really frustrated. So is there a way for me to know that I can just miss this trade entirely, that I just shouldn't have taken it in the first place? And then how about this one? Another bounce, but then look, it stops and starts going nowhere. How do we make sure we don't get into one of those treading water type situations and make sure we actually carry through? Because it's important to make sure about the time value of money. And so I had to figure out what didn't work for me. And the number one thing that didn't work for me were squiggly lines. And I know that might sound weird when it comes to the stock market and all that. I mean, everything we do is about squiggly lines, basically. But when it came to all of the indicators, most of the indicators are just squiggly lines, and it just didn't work for me. Remember, I'm an engineer. I need some precision. I need kind of no go, no go, like NASA. And so what I'm looking at is I just couldn't tell when we're looking at some of these indicators when maybe a line would go from 0 to 5 degrees to 20 degrees. All that was very tough to try and see what it was doing. And so I was trying to figure out, okay, I need to know what doesn't work for me so that I can compile it all into an indicator that does work, along with a method that does work for me. And so if any of you are familiar with the Matrix, I know it might be an old movie reference, but the Matrix is a digital reality that if you don't know how to read it, like if you didn't have the special powers to read it, it looked like computer code, which is on the left. It kind of just looked like this, a whole bunch of letters and numbers and lines, and it just made no sense, right? And that's kind of what the stock market looked like to me in the beginning. But those in the movie who had the special power to be able to read the Matrix and see the Matrix could then actually see reality. They could see real life. They could see the characters. They could see the environment. And that's what you can see here is where the code starts to turn into a person with a background. And this is one of the main characters. And really, this was a good understanding for what the stock market looked like to me before and after. It didn't make any sense. It was all letters and numbers and code. And then I started spending some time and really analyzing this and looking into it. And I started seeing some patterns, and I started to see things over and over. And I started to see things that made sense, and I could start piecing together, and it started painting a picture to me, and I could start reading the matrix of the stock market. And so what I had discovered, that I had built myself a reliable method for knowing when a stock was likely to pop or drop. And remember, dropping is just as important because we don't want the bottom to fall out underneath us. And so what this told me is that now that I had started to get a reliable trading methodology that involves minimal risk and minimal time investment, that meant I could leverage it. Because if I could do something 8 out of 10 times, that means I now actually could beat the house. I could actually start leveraging this and start putting some money on this and actually start being consistent and profitable and making some money. And so I started thinking about this. I started to get consistent. I started figuring things out, and I said, I need that process. And bringing back my aviation roots, I thought about a checklist. And here's an aviation checklist on the left. We have before start, we have after start, we have before takeoff, we have landing, after landing, all this kind of stuff that pilots in the aviation field use. And of course, I think we're very grateful and thankful that they use it. And in fact, I'm sure many of you probably don't know that the idea of a checklist actually had to be invented. It wasn't just something that was a thing. We actually had to invent it, and it was invented by the Boeing Corporation back in the late 1930s. And it was because very experienced pilots actually crashed on takeoff because of a very simple thing that they forgot to do before takeoff. And they had realized that airplanes by that point had gotten so complicated or so advanced that they had basically outpaced the ability of the human mind's memory. And so we had to build a list so that we make sure we didn't forget things. And so I think trading was very much the same way. Now, trading might be simple. We just need to go long or short or in or out. But there's a lot of stuff being thrown at us. There's a lot of chaos. There's a lot of data. There's a lot of charts. There's a lot of indicators. There's a lot of news. There's a lot of stuff. And so what we had to do is kind of figure out that process and say, how do I make sure I don't forget something? How do I make sure I don't forget a step? Because I'm sure we've all done that. I do it all the time. That's why I built one. And I think that a lot of us have had that experience to where we get into a trade and it didn't work out. And if we go back and we analyze that, we do find that one or two things that we're like, oh, I should have seen that. If I had known that, I totally wouldn't have gone in on that. And that's where the checklist comes in to say, to make sure that we don't override ourselves and to make sure that we actually follow that process. So this was actually one of my original trading checklists. Is more of a flow chart, but this is how I made sure that I followed that process and I stayed with it, and I would avoid these kind of silly, dumb mistakes that I'd be making for myself. And so I built that checklist. I went back through all the data that I gathered and kind of figured out what worked for me. And, as I said, reverse engineered a lot of those trades and how they went. And so, of course, the pilot in me felt right at home, very happy about that, coming back to my roots and everything. And so once I started implementing the checklist, I began to catch these lucrative trades and I started being more consistent. And it was really, really good and it felt really great and exciting. And again, like this one, mRNA, right here, you can see there's that hourly 50 and there's price coming right into it. Then here's the Moxie indicator looking great. And you can see right there, we got the Moxie price trigger. And look what happened right after I got in this thing, straight up. And that is the kind of Moxie stocks that I'm looking for. And then you can see my checklist helped me get out of this because it told me when these certain conditions are met and fulfilled, you got to get out. So I pretty much got all of that trade. That was 41% on that thing. I was very happy about that. And so I figured out that I had an edge. I was finally able to see these opportunities to make money where others didn't. Here's another one that we're looking at. This was NIO. Maybe some of you guys know this. This is the electric car company in China. And you can see right here, got in, flag sideways, and look what happened right after I got in. It went straight up for 3 days. And then I decided to give a little bit more time to see if this thing had any more legs to it. And then I decided to get out right there because that was part of my checklist. And it got me out. And thank goodness I did because I would have given it all back just a few days later. So very happy about that, following my process. And thank goodness for my checklist, 33.5% gain on that one. But got to be honest, as I said, had some losers. We're all human and they don't all go right. So the checklist helps me to understand when to get out too, because here we go on IQ. You can see I got in. Let me get my cursor here. You can see I did get in. And what happened? I mean, almost immediately after I got in, this thing kind of turned around and basically puked on me. And I was like, all right. So I looked at my checklist and it said, this condition has been met. You need to get out. So I got out. And good thing I did because it ended up going down further. Then it kind of bounced around and then it really torpedoed. So it's important to keep losses small and manageable. And it's this process, this management of losses that will allow you to grow your account. I mean, it's like the number one rule. You got to make sure you keep your losses small. So here's another one. Here's VIPS, VIPS. Same thing. I got in and almost immediately it didn't work out. And honestly, I much rather have a stock and a position that didn't work out quickly because then I can take that loss, I can move on, and I actually can start applying that money to other things that will work. And so 1.5% loss on that one. And I think the one before was about 4% loss. Not bad. When I'm turning in winners that are like 20, 30, 57% winners, a 1.5 or 4% loss is not bad. It's the cost of running a business. I mean, we do have to think about this like a business. We have to think about it like inventory and utilities and employees. Those things all cost. And just like losses must be controlled, so do expenses like for a business. And this is how we need to think about this. They're inevitable. We just need to accept them, move on, but make sure that they're manageable and make sure that they're small and controlled. But then, of course, the other side, we got to cash in when we make those green tickets because we want to make sure we don't give them all back. So you can see I got in right there. This was on Yeti. I'm sure a lot of people know about this one too. It was a pretty hot stock for a while. Got in, and you know what? Just took a few days to kind of boil and percolate and build up that momentum. And you can see that momentum right here on the Moxie indicator. And then boom, there it went. And this is where I got out, 37% gain. Very, very happy about that. Part of my checklist said, hey, I think you need to get out. Now, if you look on the daily chart, yeah, it kind of went sideways, took a dip, and then ran. That's fine. I'm happy about that because that was one trade. This run that comes next, that's a separate trade because I took what I needed. And any of you option traders out there, that if you catch a good one like this and it starts to go sideways for a few days and even go down a little bit, you've lost all of your gain because that's how options work. You got to cash in those things. So this is one trade. And the one after that was a second trade. So that's why I'm not too unhappy about this 37% gain. I'll take that to the bank all day long. Have another one. We got Survey Monkey. And you can see here, pretty clean right there. There's the Moxie price trigger. Price was flagging right into the hourly 50. I got in and look what happened next. It went straight up right after that. And then I gave it a little bit of time. I thought this thing might have some more legs to it. And you can see it started coming into the hourly 50. And then I got out right here when it wouldn't hold. And I said, yep, I think that's time to get out. Now, as you can see, it did go later, but that's a separate trade. I got 17% on this thing in just a few days. I'm happy about that. You put that away and you try again later and you see if there's another opportunity because we don't know this. There's always a chance that these things can just fall. And as I said, knowing when those things are going to drop is just as important to knowing when they're going to pop. So here's another one, VFC. Now this one's pretty interesting. You guys might be looking at this being like, oh, well, that's only 10%, right? I know. I've been showing some pretty good winners. This one's only 10%. I know, it's kind of small, but that's all this thing had to offer. And that's what's important about my process. As you can see here, we had a nice double bottom. We had positive divergence on the indicator. You can see that there was a pop, and I waited for price to come back in and flag into support, and that's where I got in. And look what happened right after I got in, moved up. Then it came into support and started moving up again. This thing was looking really great, and then starts to really take off. And I decided, because of my checklist, I followed the rules, I got to get out. And look what happened after that. It started to fizzle, and then really fall off. And so even though it was only 10%, which I think I still like that number, I mean, I'll take even 2% home to the bank. 10%, that's all this thing had to offer. And so, you know what? Everything clicked off perfectly on that one, and I followed my process. Here's another one, MDB. I'm sure a lot of you are familiar with this one. Another pretty good one. Now, I waited until after earnings because earnings can be a little bit chaotic, you know, but look here, right? Moved up and down a little bit. Earnings, that's the chaos I'm talking about. So I got in right after that. And what happened the next day? Exploded. Now, it did end up pulling back. Again, I wanted to see if there was some legs on this because I'm a stock trader. I don't necessarily have to worry about the volatility of options and all that. So I can actually give it some time. Well, I waited for it to go a little bit more. And then I decided I had to get out here. You can see that there was the Moxie price trigger. And look what happened when I got out. It fell. It dropped. That's what I'm talking about. That's the things that I was studying, analyzing, my engineering brain was trying to figure out. How can I figure out when it's going to do that? And how can I figure out when it's going to do that? Because all of them are important. Because otherwise, if I didn't get out, I would have given up everything I had gained, and it wouldn't have been a 12% gain. How about this one, OKTA? Now, this is an example of a couple things. One, avoiding that whole treading of water situation, right? We're looking at that. You can see right in here, price is just going up, down, up, down, up, down. That's what we want to avoid. Look where I got in. I got in right there just before price actually took off. And we could say, yes, this was coming into the daily 50, but look how long this thing actually rode and started bouncing along and stuck to the daily 50. But my entry was able to help pinpoint exactly when this thing was going to move, and it took off. Now, this one did pull back, came all the way back down to the entry, needed to test some support, but what did it do after that? Started to run up, looking pretty good. And then look, here was my first exit. And once again, knowing when a stock is going to drop is just as important as knowing when a stock is going to pop, because especially to you option people out there, you know, this would really damage you. And so I got out on my first exit, you know, took part of the position off, and then it came back. And if we look here, this was what I call a trampoline move. This is price below the hourly 50, but the Moxie indicator is still above zero. And so, you know, we'll kind of get into that a little bit later, but this is why I call it a trampoline move, because look what happened next, straight up, just like somebody on a trampoline. And so because of my checklist and because of the trade that I had with this, you can see that here was my second and final exit. Pretty happy about that, because look what happened. It just kind of fizzled and kind of went nowhere, and then took a dip and then tried to go after that. So that was 22.5% and almost 14% gain on that one. Very, very happy about that. Here's another one, Funko. Now, this one was interesting. I got to say, I'm a little proud of myself on this one, and I'll tell you why. Because we all got to be learning. We all got to be growing. We all need to do things that we aren't necessarily comfortable with. And one of the things that I'm not totally comfortable with was adding to a position. But you can see here, I got in at a perfect area and took just a couple days, and then it exploded and popped up. And you can see right there, looking pretty great. So what I did is I added more. And I could see, look at the volume that came into this thing, looking really, really good. So you can see I let it kind of settle down for the morning, and you can see it started to come into the moving averages. And I mean, I saw this thing was looking pretty good, and everything was working and just clicking off beautifully on my process and my checklist. And so I added a bunch more, and then it went up for the rest of the day. And then the next day it actually gapped up open. That fulfilled my checklist. And I took all of everything I had put on the previous day, and I took 3/4 of what I had put on earlier in the week off of that trade, because my checklist said, hey, this is good, go capture it. And of course, and it was a good thing I did, because look what happened next. So it just faded. Basically came back down, said, hey, I'm really overbought and I need to come back down to reality. And so you can see here, I did leave 1/4 of my position on. And if anybody is familiar with this stock or wants to look it up, you can see that just right after this, it did bounce. But then you know what? gave it all back. And that's why we have our stops. That's why we have our process. And it got me out, exited, and I was able to at least capture that last little bit right there before it really torpedoed. So, word started to spread about these Moxie stocks. I mean, these are pretty good. They're doing well. And my account was growing. I was having a good time. My friends and family were hearing about my success and they were hearing about all this. And my friends were here and I was having a good time. But my family was actually the ones seeing my success, seeing the gains that I had, seeing my account and the numbers that I had with it. And so my mom actually kind of approached me one day and she said, honey, I have $6,000 that I just sitting in an account, not doing anything. Do you want to do something with that and help me out? Or it just, you look like you're doing all right. How about you help out the family? And I got a little bit nervous because, I hadn't really managed or traded somebody else's money before. And so I was like, yeah, I guess. I mean, I think I can help, but if anything goes wrong, I mean, she's my mom. She'll probably forgive me anyway. So I said, okay, mom, we'll do this. So you can see the account here, April 1st, 2018, just about $6,000. And fortunately, it went well. So I was able to grow my mom's account from 6,000 to 20,000 well within a year. And we all are familiar with John Carter's Tesla trade, right? I mean, he made $1 million. Well, I didn't quite make $1 million, with my mom or in my accounts, but I made a lot of percentage. And it was the biggest one I had made to that date. I was looking at this thing. I was like, this is really great. And this is a lot of fun. So this is what I'm talking about. This is my best Moxie stock. And here's the process that went through. This is on IGC. It's one of the cannabis stocks back in the day. And you can see here, there are my Moxie price triggers. And so I decided to get in right there. Now, as you can see, I got in and then it promptly pulled back. But unlike those other losers that I showed you earlier, this one didn't fulfill my checklist to get out. The rules hadn't been violated for an exit. So I stayed in, and then I was kind of catching some flack. There were some message boards out there talking about IGC and stuff. And I just had to stick to my process, stick to my rules, and really just do the gut thing that I had. Cause I was like, no, I'm just not out yet. And so it came down, it started to hold. And then a couple days later, it started to build again. So I said, you know what, I'm going to do this. Everything looks all right. And this looks like something's going to take off. So I added more. And that was my second position right there. And I was rewarded because just 2 days later, this thing perked up and then just jumped. And so my checklist was fulfilled, my process. And so I had to engage with that. And that's where I took off a portion of my profits right at the top because it was a morning thing that opened or something. 144% gain on that. And we're talking just stock. So I said, okay, this is good. It still looks like there's more to this. And I'm like, all right, let's go for this. And so you can see this thing started to keep running and running. And just a couple days later, this thing was going vertical. And if anybody's had some experience in seeing these things, like when they go vertical, that's kind of when you need to have some red flags. So I said, all right, at the top, I didn't necessarily know it was the top, but I was like, this thing is insane. And this is crazy. 257% gain on just a stock. And this is within a few days. Holy cow. And so I took off a good chunk, like the majority of what I had, 257% gain. And then I said, all right, well, hey, I've made some pretty good money and some good percentage. Let's just see what happens with the rest of this. And so I think it was like the next day, it pretty much started to implode and went straight down. So I took the rest of it off here and I walked away with a 231% on that portion. So I was like, all right, that was pretty crazy. Had a good time with it. And as John always says, he's like, okay, what are we doing with this? What are we doing with this trading? What are we trying to succeed here? And what's our reason? Why are we getting gray hair? Why are we pulling our hair out? What's all this stress? What's all this practice for? He said, when you start making money and you start making some good gains on this stuff, take it out. Don't risk it too much. Maybe buy some land, put it into a different investment, send your kids to college or put it into a college fund, or go take a trip, do something, actually show the fruits of your labor, actually kind of turn around and have a good time with this. This is the point. This is what we're doing this for. We're trying to, or at least I'm trying to help others. And I think if we're doing this, we're trying to help ourselves. We're trying to help our families. We want to make sure we actually have a reason for doing this. And so at the time, my parents were remodeling their kitchen. My mom in particular, she's the designer one. We're remodeling their kitchen up in Washington. So I was like, hey, mom, you want to see your account? So, we had a pretty good day. There was $20,000 in there. And I said, hey, it's yours. Go do something with it. I know you're making that kitchen remodel. So here you go. So she took most of it out there. And this is the kitchen that she then remodeled. And it looks great. So that's my mom and myself up there. when I was up in Washington this last time, getting ready for the presentation, everything. And this was very exciting. I mean, it was very rewarding. I was able to help my mom and my parents, who, obviously given me so much in my life, that I could then turn around and actually do something to help them with the skill that I had acquired and everything that I've been working towards. So 233% gain total on that account from $6,000. That was great. And I had a good time, and it was fun being able to give back. And so I was getting a lot of requests to teach what I had discovered. Obviously I was kind of onto something. I had friends saying, well, hey, can I just give you money to trade? And I was like, family, I'm willing to do that. But outside of that, I'm not so sure. And so I was thinking, well, what could I do to leverage my skill? How can I help others? How can I kind of pay it forward to everybody else who have given their time and their effort and education to getting me to where I was? And so I was thinking about this. And I know that trading can be very much of a solo sport. And so we don't all have to be a lone wolf. I mean, that's why we're here. This is why we're having a good time with Simpler Trading. We're here. We have a community. We talk to other traders. We're trying to make sure that we aren't just going at this alone, because I know that trying to pick stocks on your own is incredibly difficult to figure out when and how and where to find these best opportunities and when they're going to actually go. So this is why I want to be able to show you how to take action on the right stocks at the right time. And so I took action and I created Moxie Trader. And I've been doing this for a few years with Moxie Trader and actually kind of getting out there and teaching people and building all of this. And then this is where I was able to join Simpler Trading. As John introduced me, I met him, I told him what I was up to, and he said, yeah, this looks pretty interesting. And so he gave me a platform to then turn around and talk to all of you and help out and really figure out a way to give back and reach a broader audience and do what I wanted to be doing and say, I'm helping people with Moxie Trader. And so if you like what you've seen so far, and for the first time, I'm offering these instant Moxie Trader alerts for things that for stocks that I target as opportunities with 10 to 200% profit potential. I mean, that's what we're looking for. We're looking for these Moxie trades. And my goal is to help you enjoy these precise stock trades without having to stare at the market all day or reinvent the wheel. I mean, I reinvented the wheel for myself here. That's what I did. And you can see the process that I went through. And I'm the one staring at the market all day. I like it. I love it. This is fun. This is my job. I like doing this. I mean, it's rewarding for me. I really, really do enjoy this. And now I'm with Simpler Trading, and it's a great place to be. And Moxie Trader then offers these objective entries and exits from my hand-picked watch lists. And of course, each of these trades follows my rigorous checklist that I've been talking about. And we do this to help avoid those false signals as much as possible. And so here's what you get inside the Moxie Trader Mastery. You get the Moxie Trade Alerts, and you're going to get market updates from me. We're going to be in touch. I'll be sending out all this stuff, and it's a really good kind of way that I can communicate with everybody. We're going to have live trading with a question and answer session once a month. We're going to be doing that from 2 to 4 p.m. Central. And that's where you can actually ask me questions. You can talk to me. We can talk about your stocks and my stocks and how things are looking. And I can give my advice, and we can just have a good time talking back and forth and learning and picking my brain with all the knowledge that I've been able to acquire from other people and putting this all together and compressing it. The other thing is you can get the trade spreadsheet so that you know my current positions and the trades I've closed and the ones that I've been taking and kind of seeing how things are going. And so far, it's been great. It's been a good 2019, I must say that. And then the Moxie Trader Learning Center. And this is where you can go to understand how to read my alerts, how to read my charts, how to understand and learn the things that I've learned over these years and put them together so that we can help shorten that learning curve and bring it all together. And I've even been getting emails recently saying, hey, thank you for all these things that you've been telling us and some of these little warm-up actions that I've been doing. And they really said thank you because I just had to look at this stuff and figure out what works. So Moxie Trader Learning Center really has a lot of good information from what I've learned over the years. And so here's the live trading session schedule. You can see that we start August 6th from 2 to 4 p.m., then September 3rd, and we have this all the way back to next year in July. And we've had a good time with this with John's class, his mastery programs. We've gotten some really good feedback with it. So we wanted to kind of mirror that and continue that forward because we've gotten some really, really good feedback. And we just wanted to continue carrying that forward for everybody and make sure that we can do the same thing with the Moxie Trader Mastery and just help everybody out as we go forward. So I think we're going to be looking at that and seeing what we can do to carry forward and have some special offers for everybody with these live trading sessions. And I think you guys are all going to enjoy it pretty much. So
Yeah,
John, you out there?
yeah. Well, what's interesting on something like this too, and so when I first saw the indicator, and it's like, okay, TG, well, this is your indicator is great. Everybody's going to love it, and everybody's going to want it. So let's offer it to everybody. And so a small problem came up with that. He said, well, I don't want to release this on any open source platforms. I spent 4 years creating this tool. And if we release it to Thinkorswim, then the code's going to be open sourced. And I actually don't want it to get out there, because if it gets out there and it proliferates, if I can say that word correctly, I think it'll reduce the effectiveness of it, and I want to keep it locked down. I was like, gosh, well, we don't really have, you can't lock stuff down with Thinkorswim. There's only like NinjaTrader you can lock stuff down, but that's really the only one. So what we're going to try here is TG has put together a service where he is going to do all the work, and he is going to do all the scans, all right, and just set it up as a trial offer. So here's how the trial offer works, because I know this is something where it's like, okay, this is untested, we don't know what it is. If you go to simplertrading.com/Moxie, for $7, you can try TG service for a month. He will do all the work and all the scans for you, and essentially send out a hit list that you can trade. So it's one of those things where, I think on the, my preference personally would be like, well, I'd just like to have the indicator, but I also respect his idea. It's like, look, this is something that's very special. It's very unique. If it's open source and if it's out there, it's going to reduce its effectiveness, and I want to keep it locked down. It's like, okay, well, how do we get people the information for this out there while maintaining the protectiveness of the source code? And boom, and this was the answer that kind of came up. So I think this is something that can work really, really well. And again, the good thing about it is that for $7 you can try it. Obviously it's a very, very, very low risk trial, and after 30 days, if you like it, you can continue. So what I like about this is that it's kind of like, all right, for $7, I'm going to try this. I'm going to see how it works. I can trade the stock. If there happens to be options on the stock, I could do that as well. And then, it's kind of a way to try before you commit. And I think that's the best way with something like that. That's something where, it's like, if you can't have access to the tool, but you get the benefits of the expert behind the tool showing you all the scans that are coming up with it, it's kind of the best of both worlds. So that's what we're going to be doing there. And TG, I'll turn this back over to you, and if there's any questions or anything like that. But I'm super excited about this. This is kind of a new concept for us. Usually, a lot of our users like Thinkorswim, and we just kind of release the stuff. And of course, it is all open source, but this is something, when you have something like this, that's just, the painstaking work that you put in creating this, I completely respect your decision to keep this locked down, to keep it private, to keep it from, getting out there. I think this is the best case scenario. And so it's something that's going to be rare, that not a lot of people have access to or are using. It's not going to proliferate around the internet. And this is a way to kind of get access to not only the signals that the indicator generates, but the expert and the creator behind those signals on a basis like that. So I think it's really cool, and I'm very much looking forward to it. So yeah, so TG, I'll turn it back over to you. Any questions you want to answer? Anything else you want to reiterate? But I think it's gonna be a really
Sure,
fun.
yeah. Thanks, John. Actually, I've been watching some of the questions here, and some of the ones I've been seeing is, obviously, how many trades are we going to be having per month? Well, it really kind of depends on the market, because if we're having a slow market, I need things that move, and that's what I have to do. Is I do have to time things that move well with the market, and sometimes we're in consolidation. It's just not a good time to trade, but I will keep in touch. We're going to say, hey, we're in a couple positions. This, and this is doing well, or hey, this one just moved a bunch. I'm going to be taking some off. So I will be in touch. There will be alerts. We're not going to be ghosting anybody or anything like that. But the alerts or the amount of trades are really going to be dependent on the action of the market at the time. Another thing that I saw is, do I go short? Not really. For the most part, the stocks really like to go up. I think a lot of things are really good for going long. As I said, I've traded my Roth IRA. I've traded my dad's Roth IRA, and those you can't go short. Now, granted, you can do inverse ETFs, but those are only occasionally. And a lot of times what happens is, I think that some of us want to catch every movement and every trade. And a lot of times trying to catch a short, unless it's an actual short, we're catching these pullbacks, and they can be really kind of quick. And especially inside of an IRA, we have to be a little bit slower because we have to worry about settlement. So no, I'm not really a big short trader, but remember I said that I'm really good at kind of figuring out when a stock is going to drop. And so maybe sometimes I can kind of talk about that. And if I see that we're in a position, I'm like, this looks pretty shaky. You guys you can maybe make your own decisions about that. And if your option, I know some stuff about options, if you can sell some calls overhead or something like that, but all I can do is kind of communicate what I'm seeing and how I think that the particular stock is going to move. Let's see, another one. The alerts are going to be sent out through the trading room. So I think a lot of you are familiar with that. Be sure to get into the trading room with the $7 trial. That way you can kind of test it out, see how that all goes. And then, as I said, I will have a watch list. That way we manage all of this. And then, yeah, make sure you get the Simpler Trading app. So that way you can keep it on your phone and all that. Another question I'm seeing is, what is my average position size? Well, because it is stock, I kind of need to make this a little bit worthwhile. So for me and for what I like to do, I'm comfortable with $5,000 to $10,000 blocks. That's just how I trade. That's fine. If it's a cheaper stock, I'm going to be using less dollars because they tend to move more percentage and be a little bit riskier. So, if I put out something and it's either a certain number of shares or a certain block, hey, just do what's comfortable for you. Doesn't matter. You can have a $5,000 account. You can have a $500,000 account. You just do what's comfortable for you and for your account size. Another thing was, are you going to be able to see my charts? Yes. So you guys saw all my charts. That's exactly what I do. That's how it looks. And I really like to draw and write on my charts. And so that's what's really important to me. And that's how I communicate, because I can't just say, hey, let's just go buy beyond right now. Here's my entry, here's my stop loss, go in. I don't think that would really give much trust or validation to anything. So I really do like to put out charts. I like to draw on them. I like to show my reason and what things are looking like, because I'm a technical trader. It's all based on visual, based on levels and charts, and there's got to be a visual component. So yeah, I do like to put out charts. And so I think that'll be really great, because then everybody will see exactly what I'm seeing and why I'm going into something. And so I can also use this as an educational sort of purpose as well. Let's see, what else was on there? How long are my trades normally? I'm seeing a bunch of that one. So I kind of actually went back and I studied some of them just for this class to kind of get a better idea. I had some that were 5 days. I had some that were 30 days. I didn't really have many over 30 days because, market cycles, they tend to not quite last that long. So I think that the bulk of my trades lasted probably 7 to 15 days, with some obviously going a little bit on either side. Now, that's not to say that there won't be a one-day trade, because that might be something that went wrong. If we get into a trade and I have my stop set and something changes and the stock just completely goes the other way, you're out the next day. And that's because your stop got hit. That's just how it is. And, as I said, I'd rather get out on something sooner so that I can actually take that money and then go do something else better with it, as opposed to having my money tied up in a stock for 10 or 15 days that just isn't going anyplace. So, time value of money is also very, very important. Let's see, as far as the reaction. So as I said, I am primarily an end of day trader, and I like to be able to determine, so I can better determine where stock is going to go by where it ends. So maybe today was actually a good example, because I was looking at some stuff and there were some stock that looked really great in the opening and they moved up. And then by the end of the day, it completely failed and turned around and went down. And I was like, this is why I'm an end of day trader, because, by the end of the day, I definitely I would not have been in this, but at the morning, this thing looked great. So I will do my best to stick to that and give people time. And this might be a little bit of a learning curve with everybody here, to make sure I give something out so people can actually act on it, because that's the whole point of this. The other thing is, oftentimes, if I am willing to go in a trade at the end of the day, usually means I'm also willing to then go into it first thing the next morning. And I know that might contradict what I just said, but what the point is that if it looks good when the market closes and I'm willing to put in, then it should go where I want it to go the next day. And if you can catch it without it gapping, then it should carry forward. I don't want to make my decision in the morning based on what I see in the morning. I want to have already made my decision the day before, and then wherever it goes the next morning is where it's going to go. So that's going to hopefully be how we kind of do these things. Now, as I said, I will be communicating. I will be sending out alerts and updates and kind of walking through, and you guys will know what's in my head and how this thing is going. Let's see, what else is there? As I said, I don't really go short. And let's see, day trades. I'm getting that a little bit. No, I don't day trade. I'm a swing trader. As I said, most of my trades are 5 to 30 days, in that range. I'm not a day trader. So this will be good for stock people. This is something that people who have jobs and busy lives and things, and they just kind of want to be able to see what's going on out there and know what I'm doing. And I do want to catch the trades that slow down. I want to catch things that take a few days, because it's easier for me to make one decision per day. And that's really what I'm looking at, is to not have to be glued to my computer and keep making a decision every 5 minutes and like, oh, what's this going to do? What's this going to do? And I think that would be almost impossible for an alert type service. So that's what I'm looking at, is to try and find something that's actually going to be in a trend. And then, okay, what kind of stocks? Well, I need things that have lots of volume, decent volume, usually over 250,000 per day. That's kind of what I'm looking at, because I don't want to get stuck in something, and I don't want the spreads to be too crazy. So my bread and butter, usually, I do prefer stocks over $10, but I definitely do go down into the $5 range. And sometime there was actually VSTM I was looking at earlier, and it just moved 12% today. And it was $1.37, I think, the other day when I picked it up, and whatever it is today, but I just checked percentage, it went 12% today. So that was VSTM. Sometimes I'll dip down there, and hey, if you guys look at something that you don't want to go into and it's not comfortable, then don't do it. You do need to take into account what your account is and what your level of comfort is. And this is just what I'm doing. This is just what I'm communicating out there. And then on the other side, I tend to stay under $100, usually kind of 80. I like to stay under that, just because the capital that it takes, it kind of sucks up a lot of capital, and it's a little, it's just, I don't know if those stocks can really move quite as much as some of the lower ones, because I think that, especially when it comes to stock, I think that there's more volume a lot of times in those lower stocks, because there's that is more appealing to a larger group of people. Now, that's not to say, like, Beyond Meat, I got that one, and that thing also went 34% and 30% and 10%. So when I see something that can return good percentage, I'll go in it, even if it's over $100. But I don't want to be in something that's $140 and moves 3% in 2 weeks. That's really not my style. That's not what I'm looking for. So no, I didn't build my airplane. That was my dad's, because you saw the age of myself at that time. I was pretty young. I think, actually, I don't know what age I was there. But it was a kit plane. You're right. That is it's a Glass Air 3, and my dad did put those tail numbers on there, so that was kind of fun. And yeah, so that is one of the airplanes that I grew up in, and that's why I know how to fly. So it's been really, really great doing all that. Now, I do the annuals. I do work on the airplane, and I keep it maintained. So my dad and I do that. Let's see, what else have we got here? Yeah, I do have stats on my trades. So when you guys sign up, I do have a running Excel spreadsheet on this. And so I've been filling that out. I could be a little bit better about being quick about that, but I think I'll get into a better groove about it. So yeah, I've been keeping a running log, what you've seen. I've shown you some of those trades up there. And of course, they're not all going to be winners, but I do keep them small, and having then big winners really helps offset those little, 1, 2, 3, 4% losers that we're all going to get. And that's really my range. No, I won't be giving any option advice. I don't really trade options. I'm not going to be doing spreads and calls and iron condors and anything else like that. So if you guys want to do options, that's up to you. I'm just going to be telling you when I see potential for a stock to move well, And if you want to do something else on that trade, you're more than welcome to. Just know that I try to find stocks that move and move well and kind of move on a timely basis. And so that's what I'm trying to do. Let's see.
And one comment on there, TG, for people that are asking about options on stocks is that, and I've looked at a couple of the ones you've done and, done some options on it. And what's awesome is that for those of you that are already, familiar with options, I know a lot of you guys are, is that if you get a signal from TG that the stock's going to go higher, right? Then there's all kinds of, and as he's already said, he doesn't really focus on the short side, but there's all kinds of bullish things that you could do on that. So of course, there's going to be some stocks that don't trade options, but if they do, Beyond Meat's a good example. It's like, sure, you could buy the stock, but if you understand options, then you could take that signal and certainly buy call, sell a put credit spread, buy a call debit spread. And what's great about that is you can kind of get exponential moves on that. So if on the stock, TG is making 5, 10, 20% on a stock, think of the multiples of that on an option price. For me, if the underlying stock moves up 2%, I'm happy because that means my option is doubled. But if the stock moves 5 or 10 or 20%, the multiplier effect of the option, of the underlying option, is obviously huge. And so that's certainly an opportunity here as well.
Yeah, I mean, I'll be honest. So we keep kind of coming back to that Beyond Meat. I dabble with some options just in one account that I'm still kind of practicing with. And I did on that Beyond Meat, on that second one after earnings, I did pick up one option, and it peaked out at 200% for that spike, that topped out at $200. Now, I wasn't able to get that because it went too quickly, but I was able to get about 157% on that. So as I just dabble, I'm definitely not an options guru, and I won't be giving options advice on anything like that. But as John says, if you guys know what you're doing about that, my job is to find stocks that move well. So as I said, we are going to be putting out the screenshots. That's how we kind of keep track of this, and I'm more of a visual person about that. And then you guys are asking about that watch list. So yeah, that's going to be going out tomorrow or tonight. Whenever the replay is emailed out, my watch list coming up for the next week will be coming out. So I put together a watch list, I think 2 days ago, for some of the stuff that I'm looking at, and you'll be getting that tomorrow. And then, through this whole process, you're going to be learning some of my terminology, like the trampoline move. I have what's called an elf shoe. I talk about a moat, because you think about a moat, you have like a castle with a moat, and it's to keep bad people across and protection, right? Well, when we have a very wide moat, price can't cross it. And so this is some terminology that I'll be using. And what we're trying to do is look at certain functions that price does and movements to narrow that moat so that price can then turn around and actually start going up. Yeah, so you guys are going to be learning exactly. Yeah, I'm going to be teaching. So I'm going to be putting out these stock picks, and there will be education with it. So I will define the trade, so to speak, and I'll be putting in my reasons and my rationale behind it, so that even if it's not even indicator related, there is a lot of stuff, a lot of things I've learned through just the stock movement, moving averages and support and resistance and double bottoms and all these kind of things that I will, you guys will kind of be picking up on this through osmosis, just because I keep putting it in those charts. And so that's how I do it. Let's see what else is out there. Another thing, so kind of going to that option thing, some of these stocks that I pick, I don't know what their options are. I will be ignorant into what they are. So do your own due diligence if you're going to be trading options on these. They might be thin. I don't know. They might not even have options. So I trade the stock, and that's what I'm looking for as far as those things moving. And then I'll try and be, I'll make sure that I'm actually putting out those things and educating, making sure people know what kind of moving averages that I have and what these things are, so you can kind of understand what's in my head. As I said, I'm an engineer, so I need to make sure I'm not geeking out in some way. Yeah, we do have the scheduled trading days. So let me go back one. There we go. So these are going to be the live trading sessions, 2 to 4 p.m. You can see that actually covers the close, so that you can kind of see my process of scrolling through some of these stocks and kind of what I'm looking at. And you guys can definitely ask questions, what I'm looking at. and YM and ask questions, and then we can kind of bring in your own. So yeah, that'll be great. So make sure you kind of look at these charts, these sessions, and see if you're available for them. And I'm sure they'll probably be recorded as well. All right, well, I think I'm basically seeing kind of the same stuff again. So John, how we doing? I think that's about it for our questions here. I think I've covered most of it.
Yeah, no, I think that's good. I see some people are asking about what are the prices after the trial. It's actually a very, very reasonable service. This is a charter membership rate, so it will renew at $197 a quarter. Okay, not a month, but a quarter. But after this charter rate, it is going to go up. So if you guys like it, try the $7 trial. If you like it, you can actually lock it in at $197 a quarter, which is a charter rate. And that's always kind of a, hey, thank you for checking it out and all that kind of stuff. So I think that part is pretty great. And then yeah, I mean, I think from there is, as people have questions, of course, you can email us, support@simplertrading.com, give us a call. Support is here to help you out. TG will be helping them out with any questions that come up. And again, the main thing here, and I think the main takeaway here is that it's like, yeah, this is new, this is proprietary stuff, and hey, it's $7. So we always try to think of like what's an easy way for people to at least try this out so they can make a decision if this is something that's a good fit to their trading plan or not. And I think the interesting thing here too is just the idea of like, this is not code that's ever going to be released. It's not going to find its way around the internet. And so just kind of having that exclusivity of a lockdown code, a lockdown signal, and getting specific buy and sell signals from the person who invented it, it's not something that we've done here. And I think it's great. I'm excited about it. And TG, glad you came up and asked me those questions after my talk in November at the Vegas Expo, and and looking forward to working with you on this.
Yeah, it's been a really great story and story arc between John and myself and Simpler Trading. And, hopefully as I get to know everybody that is going to be subscribing and all the members of Simpler Trading, maybe you'll be hearing more about my story here and my path and all this. It's really just been great. And I can't tell you how excited I am to be here. So some things just kind of line up and work out like that. One final question I will answer because I think it's important that people are asking, well, when is this going to start? Well, today's Thursday night, tomorrow's Friday. I don't always like to put on a trade going into the weekend. And I think maybe the market might be a little bit quirky right now. So we're going to start sending out alerts on Monday if I see something. And probably what I'm going to do is just send out a test and, hey, how's it going? This is what I'm looking at. And I want to make sure that things are working. And so we'll kind of do that to just get our feet warmed up and get this thing going. So don't expect anything solid from me until Monday. So let's give it the weekend to make sure we got everything coming in smoothly. And I think with that, we're going to pretty much call tonight, wrap it up. And thank you to everybody else on the Simpler team to help make tonight work out so smoothly. So appreciate it, everybody. And thank you for all of the people who attended this class. This was my first webinar and very grateful.
The first time is always the scariest, but after that, it's pretty easy.
Yep, over and done with. Now it's great.
Yeah, very good. All right, guys. Good night, everybody, and have a great night. For those in the room, we'll see you there tomorrow. And for those of you signing up for the service, like I said, really easy. I think easy decision to check it out for $7, and looking forward to all the information that you're going to get from that. You guys have a good night. We'll see you on the other side.